Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HK and China Gas interim report. The Hong Kong and China Gas Company Limited offers a diverse range of businesses and services across various sectors. These include energy services, gas production, distribution, and marketing renewable energy solutions, piped city gas projects, water supply, and wastewater treatment activities, urban waste utilization, projects new energy exploration and utilization ventures. In addition to these core services, the company also provides various other offerings such as piping installation and design services, kitchen design solutions and appliances, automatic meter reading systems, network connectivity, data center, and ICT services, engineering, procurement, and construction services, consultancy and engineering contractor services, gas meter and metering system, manufacturing, property development and investment activities, software development, solution implementation, and systems integration. The Hong Kong and China Gas Company Limited, 3HK, has seen a 12.78% increase in its stock price over the past year due to several key factors. A 4.8% gas price adjustment in August 2024 boosted revenue prospects, while strong residential gas sales in Hong Kong contributed to the company's growth. The expansion into sustainable aviation fuel, SAF, through Eco-Series has also positioned the company favorably for future growth, particularly with Hong Kong's plans to develop an SAF supply chain. Additionally, positive analyst sentiment and consistent dividend growth have attracted investors, contributing to the stock price increase. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: increase in city gas customers and secured new large-scale industrial and commercial customers, gas substitution for other energy sources, and expansion of gas plus business favorable policies at the state level. Steady growth in installed capacity of distributed photovoltaics, PV. An increase in contracted capacity for energy storage, successful issuance of quasi-REITs product and green methanol products, achieving widespread market recognition, expansion of production capacities through new plant in Foshan and partnership networks with various companies. Revenue decline drivers: national natural gas consumption fell by 0.9%, an ongoing downturn in the mainland property market impacting connection businesses, adjustment on standard gas tariff for customers in Hong Kong, and decrease in new household gas connection due to downturn in mainland property market. Net income and profit margins: a year of decline and shifts. The financial performance of a company has undergone significant changes between 2024 and 2025. Notably, net income decreased by 3% from HK$964 million to HK$964 million, indicating a slight decline in overall earnings. Profit margins have also experienced fluctuations across various categories. The most notable decrease was recorded in other losses/gains, net, which shifted from a gain of HK$361.7 million to a loss of HK$38.7 million. On the other hand, interest expense decreased by 12% due to reduced borrowing costs. The share of results of associates saw a significant decline of 23%, dropping from HK$691.3 million to HK$534.8 million. Conversely, the share of results of joint ventures increased by 20%, rising from HK$300.4 million to HK$359.4 million. These changes suggest that the company's financial landscape has become more complex and dynamic. The decline in net income and profit margins in certain areas may be offset by the growth in other sectors, such as joint ventures. As a result, the company must adapt its strategies to navigate these shifts and optimize its performance for future success. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash from operating activities has increased by HK$115.5 million from 2024 to 2025, demonstrating a substantial growth in the company's positive operating cash flow. This trend suggests that the company is becoming more efficient in managing its resources and generating revenue, ultimately leading to improved financial health. The company's debt level has undergone mixed changes over the period. While net current borrowings have increased by HK$224 million, long-term borrowings have decreased by HK$750 million. Current liabilities have risen by 10.6%, but non-current liabilities have declined by 0.9%. On the other hand, interest expenses have shown a decrease of 12%, or $129.2 million, indicating a reduction in financial burden. Management is optimistic about the company's outlook, citing steady progress through strategic divestitures of non-core assets. They plan to optimize daily operations by leveraging technology, including AI, to drive efficiency. Additionally, they have secured stable funding sources to meet future financial obligations, positioning the company for sustained growth and stability. There were no notable acquisitions or divestitures in the company's financial activities. The absence of any significant transactions suggests a stable and conservative approach to business expansion and restructuring. That concludes the financial summary for HK and China Gas. Feel free to comment below, and I will be happy to answer them when possible.